What's going on, investors? EBS Invest back with a brand new video. Today we're going to be discussing two types of stocks that I think most people don't normally think about, especially as dividend investors, as well as just investors in general. I feel like this is similar to Lam Research, at least in my mind, because you don't have to own the company that makes the chips. Why don't you own the company that supplies the chip makers with all their technology, right? So these two companies are similar, a little different. Thermo Fisher Scientific and Agilent Technologies. Today we're going to be discussing the two, seeing which one's a better buy because they're both very similar. Thermo Fisher has a market cap of 200 billion and Agilent has a market cap of 35 billion. So Thermo Fisher is much bigger. And you may be wondering, what do these companies do? Both companies operate in the scientific instruments and healthcare supplies field. Agilent has a little bit more broader diversification. They have interests in such as research, chemical, and food, whereas TMO offers basically a broad array of products for science, healthcare, and biopharmaceuticals. But they're both similar in that they both offer products that companies use for their business. So we're going to be judging the two. I have a list of 6 criteria that we're going to use to judge them, and the one with the best score wins. So looking at the max chart here, you can see that both stocks have performed very well. TMO has been on the market quite a while longer than Agilent has. TMO has a max return of 6,676%, whereas Agilent has a max return of 160%. On the 5-year return for both of them, TMO is 150% return, whereas Agilent has a roughly 82%, 81% return. So TMO does return more, and it does seem to be the case historically, but could it be that Agilent, due to its smaller size and continuing to grow, is a better bet? Judging from my research, I know that TMO, they're getting so large, they utilize about $4 billion roughly every year for acquisitions, and now their catalog is basically full. They've basically bought every company. Obviously, there are still things to buy, but they're not really going to be growing so much anymore, in my opinion. They already have purchased all their companies. They're already set. Like, their categories are already done. Their acquisitions are mostly completed. So how much is this company really going to be growing in the future? I personally don't think it'll be growing as much as Agilent. So our first test is we're going to do is we're going to go into the financials and we're going to see who has the best revenue growth. So clicking on revenue for each of these, we can see that Agilent has better revenue growth, compounding at 7.8% on average. And as we scroll down, they both have very nice revenue growth. Agilent has done really well since 2013, taken off, whereas Thermo Fisher is able to been increasing their revenue historically. So that is something to keep in mind. Thermo Fisher is doing about $45 billion in revenue, whereas Agilent is doing about $7 billion in revenue. The next test I want to look at is I want to see how their net income looks. How much money are they actually keeping after they go through taxes and earnings and paying out, etc. So we can see TMO net income is up and to the right. Obviously, 2022 has been a rough year for companies. This company TMO, I know, made a lot of money during COVID. They had a lot of COVID test kits, and they did very well, obviously, with a pandemic. You can see the revenue almost doubled from 2019 to 2020. Going over to Agilent, you can see net income is a little bit more sporadic. They lost money in 2020. It's likely just due to the fact that they're a little bit more diversified. They're not in healthcare as much. Their net income is more or less still growing, but not as well, in my opinion. So I have to give a check mark to Agilent for revenue, and TMO gets a check mark for net income. Now the next test is I want to see if we own this stock, are our shares getting purchased back? Are we getting returns on this company? So looking at TMO, shares outstanding diluted, you can see that shares have remained flat. They have decreased since 2019, going down every few million, roughly about 3 million a year. Whereas Agilent's trend looks a little bit more better. It looks to be that they're decreasing their shares at roughly about 5 to 6 million a year. So I have to give a check mark to Agilent here for shares outstanding. Our next check mark is going to be earnings per share, right? As shareholders, we want to make sure that our stocks that we own are actually making money and that the company is doing well on the bottom and top line in general. TMO earnings per share looks great, similar to their net income, right? You know, up and to the right, 2022 has been a little tough year for them, as we can see. But overall, they have outstanding EPS growth, 21%, 75% during COVID. But it looks to be that since, what year is this, 2018, they've been increasing their revenue, I would say, at about 25% on average, excluding COVID. Going over to Agilent's earnings per share, in my opinion, since 2018, similar to how we judged Thermo Fisher, has been increasing. 2020 was a wild year for them, but you can see they had negative 53% in 2018, 250% in 2019, and then the 2020 year, and then they had 72%. So, but I do, in my personal opinion, I think Thermo Fisher's is a little bit more consistent. It just looks a little bit better. So I have to give the earnings per share to Thermo Fisher. The next test we want to do is we want to look at the dividend. So we want to make sure as dividend investors that these companies have nice dividends. So we're going to scroll up, we're going to find the dividend page, and Agilent has a 20% payout ratio, whereas Thermo Fisher is offering about a 9% payout ratio. Thermo Fisher has higher dividend growth, whereas Agilent does not. Scrolling down here, you can see that they have been pretty consistently upping their dividend growth year over year. It's in a nice 16% average, whereas Agilent has been decreasing it over the time. But both have very nice dividend growth, but it looks to be that Thermo Fisher has better dividend than Agilent. The next thing I want to look at is I want to look at their gross margin. I like to own stocks that have a gross profit margin of roughly 50% or higher. 40% is the minimum for me. So looking at Thermo Fisher, you can see their gross margin has hovered, I would say, around 45%. During 2020 and 2021, they had a 50%, but it looks to be that they're staying very consistent. Going over here to Agilent has a little bit higher gross margin at 54, about 55%, 54, but has been decreasing a little bit, but still remaining very consistent. For this one, judging between the two, I'd have to say that Agilent has a little bit better gross margin. So going through a 6 criteria, it is currently a tie. Thermo Fisher has better revenue growth, better earnings per share, and a better dividend, whereas Agilent has better net income, is decreasing their share count much better, and has a better gross margin. Our last test that I would have to say to break the overall stalemate is seeing how their EBITDA and EBITDA margin looks as a tiebreaker. Thermo Fisher's EBITDA is up and to the right, looks very good, and their EBITDA margin looks similar to their gross margin, but you can see it has been increasing. 2021 they had a little bit of fallout, but if you don't count 2020, it is up and to the right here. And 2022 has been a rough year for them. And then coming down here to EBITDA on Agilent, their EBITDA is up and to the right, very nice, and their EBITDA margin looks kind of flat, comparing it back to 2014. So this one, just due to the fact that Thermo Fisher's has better EBITDA growth, their chart looks a little bit better and they have better margin. I would have to say that Thermo Fisher gets the EBITDA win. So Thermo Fisher by judgment of 4 checkmark to Agilent's 3 checkmark. And also combined with the fact that Thermo Fisher has better max chart performance, it does look a little bit more enticing. Scrolling over here, we can see on the backtest portfolio. So I'm going to go into our calculator here for stocks. And all we need to do is we just need to grab the earnings per share, 15.34. And we're going to plug it in here. And I read some research reports and they expect Thermo Fisher to grow at roughly 6% revenue growth. So if we plug in 6% revenue, we get roughly a fair value of about $281. So judging off that, considering this share price right now is about 528, and look at how perfectly this aligns. We just need to drop $3 for us to get our 20% margin of safety. I think if you wait for TMO to drop a little bit more, you could definitely pick the stock up. I personally think it's better of the two. They have a broader selection like we talked about, and they perform better in our test. Now let's analyze. So if we grab Agilent's earnings per share, and Agilent has been growing a little bit faster from the research reports and studies that I looked at. They are growing at about 6.8%, which isn't much, but still considerable. And according to this, Agilent is a little bit overvalued, right? Even with that 6.8% growth rate, plug it in the earnings per share, get an intrinsic value about $90, with an acceptable buy price of about $72. So this stock needs to fall roughly about 30% just to get in. So judging off of that, I'd have to say that Thermo Fisher is a better stock. Thermo Fisher is looking at roughly, if you wait a little bit, you could have potential 20% upside if you let it drop a few more dollars. It looks to be that these stocks recently in the 1 year haven't been performing to the market standard. You can see they've kind of tapered off after hitting their high. So they are coming down. And especially with that dividend growth, that is really strong dividend growth and low payout ratio, I think Thermo Fisher is a better stock here. Thank you guys for watching. This has been EBS Invest. I hope you guys enjoyed this video, and maybe I gave you a better idea of the two because I know it's hard to decide. Also, I announced my newsletter. Please subscribe. That'll be in the description below. Please subscribe to the YouTube channel, drop a like or a comment. That'd be awesome. Thank you guys for the support. Appreciate you all. EBS out.